dry shampoo article came out. This was, I think, Anna, this was like 18 months ago, I think, that you had this one.
Yeah.
I emailed Anna because my wife uses dry shampoo, and I said, what are some safe dry shampoos? Like, the question, though, is like, what are consumers to do here? And that's what I think is so frustrating about these findings for a lot of people is like, it seems like everywhere you turn, there are contaminants or things that you don't necessarily want in your bloodstream, in your body. What should we be doing?
And interesting on a day where the SEC Chair Gensler was talking about the importance of companies being very kind of transparent and have to report in terms of climate and climate impact. So forgive me. Go ahead, Anna.
No, I agree. I think that, people can get overwhelmed with so much that's out there. I just as a healthcare reporter, not wanting benzene in my products, I put that at the top of the list, just given how potent it is. And one of the silver linings of Valisher's finding, at least in the initial testing, they found that other products that are used to fight acne that don't contain benzoyl peroxide, so you may have seen ones with like salicylic acid as the one they tested most, those did not test for elevated levels of benzene. So it's possible to look at the label, look at the active ingredient, and see if it's got something else other than benzoyl peroxide in it, and then you may be on a good path. Just note that Valisher didn't go in depth on those that didn't contain benzoyl peroxide, but in initial testing, they looked better.
I think anyone who was a teenager, in the early 2000s is familiar with salicylic acid.
It's been out there for a long,
It's been out there for a
time.
while, yeah.
All right. Interesting. We're all kind of somber a little bit after this one. Great reporting as always. Anna, thank you so much. Bloomberg News healthcare reporter Anna Edney joining us there with the latest on that, joining us from Washington, D.C.
Hey, stock's losing a little bit of steam as we speak. The S&P 500, it's still higher, but by 0.4%. The Dow did go into the red earlier, but it's up 0.1%. And the NASDAQ is composite, I should say, is up about 0.4%.
And our quick check, because it's moving around a lot. Shares of New York Community Bank Corp right now up about 5% in today's session. Some wild swings, and we know many halts, if you will, because of the volatility that we've seen in that name today. And of course, the big news, raising $1 billion in equity led by a variety of investors and some changes again over at that firm. But nonetheless, that's kind of our market trade right now.
Hey, let's go back to Washington, D.C. for a check of the latest world and national news. We got Amy Morris in the Bloomberg 99.1 newsroom. Hey, Amy.
Hi, Tim. The Supreme Court has scheduled arguments now for April 25th so they can review Donald Trump's claim that he is immune from criminal prosecution on charges of trying to overturn the results of the 2020 election. The case will determine whether and how quickly Donald Trump faces trial in D.C. In front of a House panel today, Federal Reserve Chair Jerome Powell was asked if he believes there won't be a recession.
There's always a meaningful possibility that an economy will fall into recession. I don't think that possibility, though, is elevated at the current time.
Powell told lawmakers that the U.S. Central Bank is in no rush to cut interest rates until policymakers are convinced they've won the battle over inflation. After overwhelming losses, GOP contender Nikki Haley is ending her campaign with a thank you to the American public and a warning for members of her own party.
Our Congress is dysfunctional and only getting worse. It is filled with followers, not leaders. Standing by our allies in Ukraine, Israel, and Taiwan is a moral imperative. If we retreat further, there will be more war, not less.
Haley also indicated she will not immediately endorse Donald Trump. Indeed, she did not. However, the Washington Post reports Senate Minority Leader Mitch McConnell today endorsed Trump for president, cementing his continued hold on the Republican Party. A commodity ship was on fire and drifting near Yemen after being hit by a missile, with a U.S. official expecting fatalities among the 20 crew members on board. The True Confidence was struck earlier today by a missile suspected of being launched by Yemen's Houthi militants. And the UK Navy says the vessel had been abandoned. A U.S. defense official says it is likely some of the crew have died in that missile strike. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We are looking at an up day. Lots of moving parts to today's trading. Let us head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks in the green, but off their best levels, with the Dow currently up 82 points, was up 273. S&Ps are higher by 24, while NASDAQ rises by 0.5%. The U.S. 10-year yield falls to 4.1%. Gold is up 16. Oil is also rising, and Bitcoin is higher by 6%. Among the main 11 S&P sectors, leaders were tech and utilities. Only telecom and consumer discretionary were in the red. And leaders to the upside in the Dow, Intel and IBM, while Disney and Verizon led to the downside. After earnings, Brown-Forman fell 9%, and among the regional banks, NYCB fell as much as 47% before announcing they were getting a $1 billion cash infusion. Wrapping things up, CrowdStrike rose as much as 23% after earnings before paring gains. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
To hear live breaking news over your Bloomberg, type SQUAK, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
You drive me crazy.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just about 18 and a half minutes left in today's trading session. Carol Master along with Tim Stenovic. Charlie, of course, breaking down the trade here. We're definitely off our best levels of the day when it comes to the equity trade, but green across the board, albeit kind of small moves here, but we do have... the NASDAQ 100 looks like beating the major equity averages on a percentage basis, up about 0.6%, Tim.
Okay, so what does our next guest have to say about all of this? She focuses on bonds.
Not like anything was going on today.
Yeah, exactly. Like not everything was going on. Joanne Bianco is investment partner and client portfolio manager at Bond Blocks. It's an ETF issuer focused on fixed income, about $2.6 billion in assets. She joins us from Chicago. Carol, I want to toss it over to you because you got a really good question that's very timely for Joanne.
Joanne, great to have you here with Tim and myself. And we just want to start with the news of the day. And we're kind of a little obsessed, but rightfully so. Watching New York Community Bancorp, stock is up about 5% here, quite wild swings, but on a day where they raised over $1 billion in an equity investment. Handful of investors, well-known investors, as we heard from our Matthew Monks, U.S. Deals reporter earlier. Having said that, with this $1 billion equity investment, would you buy the debt of New York Community Bancorp?
That's a really good question. It's definitely a very fast-moving situation, and it's obviously very good news for them to receive this $1 billion equity investment. It's certainly a vote of confidence. We don't think that their troubles translate yet into a more worrisome contagion effect, but it's just going to be a matter of time to see if this does give the market the confidence that it needs to be willing to invest in their debt.
So is that a no? You wouldn't buy their debt at this point?
No, I think it's a tough question. It's a tough question.
When would you? What would you need to see from the bank and from the balance sheet in order to say, okay, yeah, I would do this?
I think you would want to see that this really does stabilize the situation. So this equity investment would be such that it's big enough such that it does really shore up their capital situation. And so, I'm just not close enough to the situation to really know for sure what it means.
No, that's fair enough. But when you look, okay, so widen out. Let's just stick with, before we get into kind of Jay Powell, which was how we kicked off our broadcast a few hours ago, coming off of his testimony up on Capitol Hill. But when you broaden out more broadly in kind of the corporate bond space, what's attractive at this point? Where do you find opportunities?
Well, we're at elevated yields for corporate bonds because of the interest rate scenario that the market is faced with, and also a very resilient economy, which has translated into strong fundamentals that continue for corporations. So we like corporate credit, both investment grade and high yield, but within investment grade corporate bonds, we're particularly constructive on the BBB rating category. We feel like why shouldn't investors take advantage of the increased yield and total return potential in BBBs?
So across the board in terms of, nothing in terms of sector or industry specific?
Well, there's a number of sectors that we like as well. I mean, the energy sector has been very strong, really good credit quality. There's been a lot of focus on balance sheet management there, and the price of oil, and it has been very helpful in terms of the type of cash flow that those companies can generate because of current commodity pricing. So that's definitely something we like. We also like companies in the core industrial sector as well. It's just, again, the resilience in the economy. Resilience is not an overused word to describe the economic conditions that corporations are faced with.
We talked a lot of our program, and at least in the first special hour that we did following Jay Powell testifying in front of the House. He'll be in front of the Senate tomorrow. Of course, talking a lot about the rate environment and the way rates move to change. Rates may change this year. What happens to your business when rates do fall?
Well, there could be a total return tailwind for investors in fixed income. Prices would go up of the securities that they hold. So it would be a good thing there.
Well, what about new money coming into the ETF? Yeah, what about new flows coming into the ETFs, though, in a lower rate environment?
Again, we're not expecting that rates are going to go back down to the really low, near zero levels that they were at before. So there's still going to be a place for fixed income and fixed income ETFs in people's portfolios in terms of the type of attractive opportunities that will be available.
I do want to ask you about your thoughts on what Fed Chair Jay Powell had to say today. Basically, our analysis with our in-house group and externally is that basically we got a lot of what Jay Powell said at the last Fed meeting. And so not necessarily any new surprises. Didn't talk a ton about the economy, but the Fed, of course, concerned about going too soon when it comes to cutting rates, but also we're concerned about staying where they are too long and the impact it could have longer term on economic growth. What was key for you, if there was anything here that you thought was constructive, especially when it comes to the investment environment in your world?
Well, I mean, he definitely reiterated that there is no rush for the Fed to cut rates, that they definitely want to continue to watch the data that comes in. I don't think it was, I think, positive for the market, positive for fixed income and equities, that he was saying that we're at peak rates, because that obviously it would be, if we expected rates to have to be increased significantly from here, that would be something that would be probably more negative, certainly for the equity market, possibly could be harder on the economy as well.
Would you, just in the last 90 seconds that we have with you, last minute I should say, what would have to happen, in your opinion, for the Fed chair to not follow through with the idea that we're at peak rates right now? Like, what would have to happen in the economy for the Fed to raise rates one more time, like we heard posited from Larry Summers a few weeks ago?
Well, a reacceleration in inflation that's sustained.
Okay.
I mean, that's the short answer and the long answer.
Well, look, I mean, you bring up a good point.
Makes
We're getting the February jobs numbers on Friday, and if that's comes in way past expectations, CPI happens next week also, and if that number comes in once again hot, then I think people might start asking those questions, Carol.
Yeah, absolutely. All right, gonna leave it there. Hey, Joanne, thank you so much. Really appreciate your input here today. Joanne Bianco, she's investment partner and client portfolio manager over at Bondbox, joining us in Chicago. Just got about 10 minutes left in today's trade here. I'm going to go, though, to the fixed income trade, the U.S. Treasury, if I may. 2-year yield, 455, kind of have come off our lows of the day. No doubt about that. Going to the 10-year with a yield of 4.10, and it too is bouncing off its lows of the day here. But we'll get a key, of course, read on Friday with the monthly jobs report. And we've got equities, a little bit of buying here into the close, moving off our lows. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet, the maker of the weight loss drug Wegovy wants Japan to know it has an obesity problem as well. And with that story, here's Bloomberg's Denise Pellegrini.
Wegovy maker Novo Nordisk says it's targeting Japan precisely because people in the country generally don't think there's an obesity problem there, and they have a general lack of awareness about the disease. But obesity has been dramatically increasing in the country, especially with men. The number of those obese in their 20s doubling in the past 3 decades or so. And that could be extra costly for Japan's universal health care system, and that could motivate the country to go all in on the drug. At least that's the hope of the Danish drug maker, which says it sees very strong growth potential in Japan. Denise Pellegrini, Bloomberg Radio.
And ADRs of Novo Nordisk, right now they are down by 0.1%. The day's big business story. Commercial real estate lender New York Community Bancorp has received an equity investment of more than $1 billion, gaining a vote of confidence in the struggling lender from investors, including former Treasury Secretary Steven Mnuchin. Now, in a statement, NYCB said the capital injection was led by Mnuchin's Liberty Strategic Capital, Hudson Bay Capital, and Reverence Capital Partners, confirming an earlier Bloomberg News report. Shares of NYCB have been bouncing around today. Very volatile stock right now. After a couple of trading halts, we got NYCB up by 7.6%. Some of the other stories that we're following for you today, a Senate hearing was told Boeing officials have failed to fully cooperate with government investigators looking into how a panel blew off a 737-9 MAX jet back in January. Boeing shares right now, they are unchanged on the day. And those are our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
This is Bloomberg Business Week with Carol Massar and Tim Stenevec on Bloomberg Radio.
All right, everybody, just got about 4.5 minutes left in the trading day. We're going to head over to our TV colleagues in just a moment. We'll count you down to the closing bell. As we said, New York Community Bancorp, certainly front and center. I can just give you a little hint. It's going to be one of my gainers if it holds.
Is it?
It's up 7.5%, but we will see what it does. But a lot of volatility in the trade today.
Hey, one story we want to talk about, not related to New York Community Bank, but related to New York.
Nicely done.
Thank you. And it is among the most read on the Bloomberg terminal, not only in the last hour, but the last 8 hours as well, is about the governor of New York, Kathy Hochul, deploying 750 National Guard officers into New York City's subway system after a rash of violent incidents has reignited fresh concerns about safety on the biggest U.S. transit network.
Yeah, Hochul's going to send a combined 1,000 safety officers to the subways, the 750 National Guard officers, along with 250 personnel from state and metropolitan transportation authority, the MTA, transit police forces. The governor announcing earlier today the National Guard members will conduct random bag checks on passengers, and plans are underway to install more safety cameras. This move coming amid a series of high-profile shootings just 2 months into the year that has shaken up mass transit riders. For those of us who ride it fairly regularly, you and I among them, it's been a little bit rough going, to say the least, coming off the pandemic.
No question about that. Also, we should note for people who don't necessarily live in New York, or even remind them that the state, not the city, is responsible for the MTA. So that is the New York City subway, in addition to buses and other transit. In addition to that, Carol, there's a big argument to be made about how a functioning transit system here in the city is essential for functioning business here in the city, especially as more and more workers are returning to the office post-pandemic. Companies want them back in their office. You need safe and reliable transportation in order to get them to do so.
Yeah, no, it's a really good point. And, you know, people need to feel safe, and there's really been a lot of concerns, certainly about what's going there. So we'll see whether or not this ultimately will make some kind of a difference.
Crime is on New York City's transit system is up 13% this year through March 3rd compared with the same period in 2023. That's according to NYPD crime data.
All right, everybody. Just got a few minutes left in today's trading session. Quick reminder of where we sit. S&P 500 up about 26 points. You've got the NASDAQ 100. It is really quickly up about 0.7%. Over to our TV colleagues we go. We're going to count you down to the close on this very, very busy Wednesday. Stick around. Beyond the Bell. It's starting right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Alex Steele. We're counting you down to the closing bell. You're here to help take us beyond the bell. It's a global simulcast, joined now here in our television studio by Scarlett Fu and in our radio booth with Carol Massar and Tim Stenevec as we bring together our audiences across all of our Bloomberg platforms. Coming off a pretty big sell-off yesterday, Carol, and we're getting a modest rally today.
Yeah, a modest rally, bouncing around a little bit. Obviously, to some extent, maybe the market's following a little bit of what we got from Fed Chair Jay Powell, the New York Community Bancorp news as well. But something that has been solidly in the green for most of the day is the Philadelphia Semiconductor Index, still up about 2.4% here with just a few minutes to go in the Wednesday trade.
You mentioned Powell's testimony. That's where I want to go. I think investors are breathing a sigh of relief that Jay Powell really stuck down the middle. It wasn't a dove. He wasn't a hawk. I think it was Steve Matthews who said that some Fed chiefs like to refer to themselves as owls, or Fed speakers like to refer to themselves as owls, if we think about a different type of bird out there.
I wanted to call him a turducken because he kind of covered, he kind of keeps like down the middle.
That's a lot of testimony that he answered a lot of questions.
I think he wants to be invisible right now.
Well, he's got to get through tomorrow before he does that.
It looked like he was done by the end.
I just have to think how much he must hate these things.
It doesn't
Part of
show
the
it,
job.
though. He
With
doesn't
all the,
show
well,
it.
yeah, because getting paid, this is part of your job. Maybe it's the job that you like the least. But anyway, it was definitely a non-mover. When it came to, say, the bond market, you saw some buying on the back end, but that's, pretty much it.
It'll be interesting to see day 2 of his testimony on the Senate tomorrow, particularly in light of the news around New York Community Bank Corp. A lot of questions here about the health of the regional banking sector. As we get the closing bells here on this Wednesday afternoon, a big flip-flop from what we saw yesterday where everything looked dour and a lot of those moving averages were being tested to the downside. A big bounce off of those moving averages for all of the major indices. The Dow Jones Industrial Average up 76 points or 0.2%. The S&P 500 going to close higher, back above 5,100 or about 0.5% gain on the day. The NASDAQ back above 16,000 with a gain of about 92 points or 0.6%. And the Russell 2000, that is your relative laggard, only by a smidge, but it's up about 0.7% or 14 points.
I love that you said schmidge. All right, let's go to the S&P 500. 365 names, guys, to the upside here. 135 to the downside, and Scarlett, 3 unchanged.
And the leadership has really changed over the last couple of hours, too. Tech was the big gainer of the day, still up 0.9%, but you can see utilities moved to the front there, up by 1%. It's green mainly when you look at the IMAP, and that's because the sectors that are in the red are pretty limited. We're talking about consumer discretionary, and that's on the back of Tesla, and communications services, which is down marginally off 0.2%.
All right, guys, let's get to some of the individual gainers. I was really nervous to put this in because I thought it was like kind of a sure thing, and then, of course, it was bouncing around and all the volatility. But New York Community Bank Corp, which was at its lows down 47%. It was halted. Then we got the news of this more than $1 billion equity investment, if you will, or cash infusion, I should say. And then you also had the stock up as much as 36%, many different halts as the volatility. But the stock shares of New York Community Bank Corp finishing the day up about 7.5% here on the day. Do want to also mention CrowdStrike. That was definitely an outperformer, breaking the earnings last night at its highs, up almost 23%, finishing the day with a gain of just under 11%. So a top gainer in the NASDAQ 100, hitting a record high. The company reported, as you know, fourth quarter results better than expected, and it did give an optimistic outlook for the current period. I do want to point out several analysts raising their price targets on that name following their results. And then Dexcom, wanted to go there, finishing pretty much near its highs of the day, up just shy of 10% here. It was a top throughout the day. I think it's the #1 gainer right now in the S&P 500, also a top gainer in the NASDAQ 100, heavy volume. FDA giving clearance to its over-the-counter Stelo product, making it the first glucose biosensor cleared in the U.S. for use without a prescription. Wall Street cheering the announcement, with BTIG coming out saying the clearance came well ahead of their expectations. So again, Dexcom shares up specifically 9.8%.
All right, let's go get some of the decliners on the other side of the chart. Taking a look at shares of Apple, finishing down by 0.6%. It did fall slightly, though it was the worst performer on a points basis in the S&P 500, just given its size. We should note Apple shares falling to levels last seen October 27th. It is down around 14% since those December highs. Certainly one to watch there. Also, Brown-Forman, the worst performers on a percentage basis in the S&P 500 today, fell as much as 10.5% earlier in the session, finishing down by 7.3%. It's the company behind Jack Daniels and other liquors. It lowered its fiscal year projections for organic net sales growth and organic operating income growth. Shareholders reacting accordingly. And check out shares of Foot Locker today. Shares falling the most ever after the company pushed back a plan to expand its sales. Yeah, $9.5 billion by 2 years after a sluggish year last year. Shares finished the day down by 29.35%. The company also predicted adjusted earnings of $1.50 to $1.70 per share for this fiscal year. That did fall short of analyst estimates. And I did want to do a rare fourth decliner here, Alex. Xcel Energy. Shares of Xcel Energy hitting their lowest level since March of 2020. Only finished down 0.4%, but they did fall as much as 3.8% earlier in the session. This after Bloomberg News reported, after seeing photos, that the toppled utility pole that Xcel Energy had been asked to preserve as potential evidence was inspected and marked with a do not climb symbol before the start of the worst wildfire in Texas history. This is a stock that I talked about last week because there was a law firm that sent a letter to Xcel requesting it hold onto the pole. and said that tags had meant it had been flagged as needing attention during an inspection earlier this year. Excel shares down about 16% since February 28th.
Yeah, it's been a really brutal ride for Excel in relation to that. Guys, buying on the curve, pretty much. We're looking at a bull flattening, buying everywhere. You have more buying in the back end, though, so yields are a bit lower. About 45 basis points negative is the spread between the two. But, you know, we didn't learn that much from Powell. Steady as she goes. I feel like the only thing we did learn is that inflation doesn't have to hit 2%, just the trajectory has to be towards 2%, which we already kind of knew, and we're doubling down on that.
Yeah, absolutely. Here, you know, it's interesting too. We talk about sort of, you know, Jay Powell on Capitol Hill and all the focus right now on economic conditions. But it's kind of interesting too. I mean, there are a couple big stories out there that I think gives us a little bit more insight into some of those conditions. And one stock that you didn't mention, I don't know if it was Carol's job or Tim's job, but you failed, was Vail Resorts here. They actually
ticker MTN.
Oh, maybe I should have left New York Community Bancorp off my list.
Yeah, I don't know.
Just saying.
I don't know. Brown Foreman. Tim's talking about liquor. Tim doesn't drink. What does he know about?
I know, but I did. You know, it's okay. So you're talking about Vail Resorts, ticker MTN. Shares finishing the day higher, what, by more than 4% because Scarlett, they're able to charge more for the Epic Pass?
Yeah, they're already announcing their 2024 to 2025 season pass pricing. I mean, the 2023 to 2024 season isn't even over yet, but the price is up about 8% year over year to $982. Granted, you can go to Beaver Creek, you can go to Whistler, you can go to Hunter, you can go to Mount Snow, but that's some pricing power there.
Well, yeah, but isn't this just like Wall Street goes to Vail? Right? I mean, it's not like
yeah,
but it's not like everyday people are going. We're not going.
I will say, Carol's heard this a million times, but I lived in Vail when they unveiled the Epic Pass. I spent 3 years after college there. This thing was revolutionary. Really? I mean, the cost of just a season pass in Vail, this was back in like, you know, the mid-2000s, like early 2000s.
Okay.
Was over $1,000 just for a season pass in Vail. When this Epic Pass came out and you could go ski at all the Vail Resorts mountains, which back then was about 6 or 7, it didn't include all the ones that Scarlett just mentioned. This was like $600 at the time. I mean, it completely changed the ski industry. You had Alterra come out and try to, you know, compete with it.
There's Icon Pass as well.
Exactly, the Icon Pass as well. This completely changed the ski industry, and it also changed the cash flow for these companies too, because if you buy a ski pass now and the snow isn't good next year, well then Vail Resorts ends up being the winner.
You know, one thing that I should mention is the analysts have noted that the Epic Pass price growth is still about 19% below the CPI growth since March of 2020. So they could have priced it even more aggressively.
Okay, fine. But there is some inflation there because people are willing to pay for it. Let's take the other side of it, shrinkflation. This has been all the talk over the last 2 days, guys, because Cookie Monster is weighing in on this. Cookie Monster
tweeted. Wait, is he a new Fed member?
What?
Is he a new Fed member?
Do I do Fed members?
No,
Did he do
just
Fed?
go.
He says, me hate shrinkflation. Me cookies are getting smaller. Guess me going to have to eat double the cookies. But the whole point is that it's true. It's like,
excuse me, can you say that again, Alex?
You do that really well.
I could a lot better. I wasn't really committing to that point. But the idea of shrinkflation is you buy the same thing, but they put less stuff in the package because everything's just too expensive. So on the one hand, maybe you go to Vail and pay the pass, and on the other hand, your cookie is this small.
Yeah, that's pretty depressing. No, we've all talked about that. I feel like this has been happening right for some time. So yeah, that's kind of a bummer. First of all, you do a great Cookie Monster.
No, it could have been better. It could have been better.
Good.
I feel it the most with ice cream.
Shrinkflation and ice cream?
Shrinkflation and ice cream.
The one thing I will say...
It's no longer a pint of ice cream?
Exactly right, Scarlett.
I'm going to bring it back to the
14
Fed.
ounces.
Don't call me boring. But in the beige book, right, businesses found it harder to pass through higher costs to their customers who became increasingly sensitive to price changes. So I do wonder if maybe, I don't know, maybe this is some pushback just against the environment or a sign, or maybe we're pushing back against shrinkflation. Like,
people are fed up, Carol.
We're fed up and we're not going to take it. So
cookies.
I'm out of here. I want cookies.
Carol wants cookies.
I always want cookies. All right, guys, that's a wrap. Our cross-platform, radio, TV, YouTube, and of course, Bloomberg Originals. We call it Beyond the Bell. We will see you again, same time, same place tomorrow.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
Well, it is Bloomberg Business Week. That's Carol Masser. I'm Tim Stenevec, live from the Bloomberg Interactive Brokers studio in New York. To our most read story on the Bloomberg terminal about the hidden crisis brewing in U.S. housing. California, the most populous U.S. state, it's home to Hollywood, Silicon Valley, and a real estate market worth more than $9 trillion. And Carol, it's going to be ground zero for a sweeping financial crisis.
Yeah, this certainly caught our attention. It all comes down to wildfires and insurance. When California's next monumental blaze begins, the toll will be vast. People will be injured, some will die, thousands of homes will be destroyed. And, you know, that is all very serious and garners a lot of attention, and rightfully so. But also there's a big question, who will compensate those who lose their homes ultimately, Tim?
This is an exclusive feature. It's by Leslie Kaufman, Sejal Kashan, and Nadia Lopez, and it's part of Bloomberg Green's investigation into how climate change is making parts of the planet uninsurable, leaving millions of people without a safety net. Governments and companies, they just aren't prepared. We got Leslie Kaufman with us right now. She's a correspondent for Bloomberg Green. She's here in the Bloomberg Interactive Brokers studio. Good to see you. I'm so glad you wrote this story because you really put numbers into how big of an economic impact and how this is really, no better turn of phrase, a tinderbox waiting to explode. Talk to us about some of the numbers that you and the team found.
Yeah, it's some very big numbers. So as Carol mentioned up top, there's $9 trillion in real estate. But what we've seen is that private insurers are pulling back out of this market. We've written a lot about that, as have other people. The piece of that that's getting less coverage, but which we focused on here, was who's picking up that coverage. It's state insurance plans of last resort. These are state-created plans that were only really meant to help a very few number of people. But as private insurers pull out, more and more people are pouring into them. Right now, recently, they crossed $1 trillion in exposure. Wow. So they've been sneaking up on us. In California alone, it's $290 billion. That's up sixfold in 5 years. In Florida, where it's $525 billion. It's doubled in just since 2022.
Where's all this money coming from?
Well, so that's a very good question. If you were a private insurer, you would be forced to charge premiums that were enough to cover it, or you'd have reinsurance, and you'd have to stress test it. Governments don't have to do a lot of that. The state rules are very different.
You know what's still so surprising to me is that we don't necessarily see this reflected in the real estate market. This risk right now. We still see the cost to own a home in so many parts of California, including the fire zones that you talk about in the piece. It's mind-bogglingly expensive.
Yeah, but the thing is, they're often in those places because they're cheaper than somewhere else. But there are a couple things. Even when insurance goes up greatly, it's often after you've bought your home. So you're kind of caught. Like, no one wants to buy it once the insurance is already up, and you bought it when the insurance was lower. Once upon a time, the insurance you got on your home when you bought it would have been a pretty good bet. The problem is now with climate change, and I want to emphasize the climate change part, things are getting riskier and dangerous. So those numbers, which were stable when climate was stable, are not stable anymore.
You know, I'm thinking about this. I'm thinking about initially the origins of ESG and what it was supposed to kind of do in terms of, you know, risk to companies because of environmental social governance. I'm kind of thinking about that. I'm thinking about today, Gary Gensler and the SEC forcing companies to disclose their greenhouse gas emissions for the first time. You know, so we're kind of understanding climate has an impact and it has a cost, and somebody's got to bear that cost. And I feel like this rolls into it because, you know, right now states seem to be kind of hiding. It feels like there's a great quote in the story that they're turning these plans into a magic hiding place to disappear risks that just gets too big for the private market. But the risk doesn't go away. And ultimately, somebody's going to have to pay the piper.
That's exactly right. So I did love that quote, too. That's Nancy Watkins, who's from Millman, who does insurance consultancy. And they've been looking at the growth of this, and they can't figure out where that money's going to come from in a really big storm. We looked, and they're not the only ones. Senator Whitehouse in Washington is starting to hold hearings on Washington. They figure that if there's a direct hit, Category 5 to Miami, it could be $1.35 trillion in damage. Now, not all of that is covered by insurance or state insurance, but to pay that back out would be $60,000 per person in the state. And remember that not all of those people are adults.
Didn't we just do a story, wasn't it just a little while ago about in Florida, particularly like people just kind of dropping their insurance?
Yeah, if you don't have a mortgage,
Right.
you're allowed to do that.
Right.
But a lot of mortgage providers make you have insurance.
Right.
I don't know if all do. I would imagine they all do because they don't want to be stuck with just a piece of land. Leslie, we're also Do you think we could foreseeably get to a place? I mean, in the piece, the three of you write about a handful of companies that have stopped insuring people in California, and we're moving back to California now. But would we get to a point where there's no homeowners insurance available in California or Florida?
Well, California more than Florida. So Florida has a provision that ensures that the insurers. So the way it would work if there was a big payout that exceeded reinsurance and premiums was, in most states, they will force the insurers to pay that money in a proportional amount to their market share. The irony there is that many of the insurers who didn't want to insure in these risky areas are now on the hook for those through the state mandated plan. So you can see if your insurer is sitting there thinking to yourself, I don't want to be on the hook. And as more and more pull out, the more and more you're on the hook because your market share grows. And so it creates a vicious cycle. More reason to pull out because more liability, more reason to pull out.
We're regulators, federal regulators in all of this.
Well, the insurance is state regulated. So there are state regulators, but these are state created plans. So they're not subject to the same kind of stress tests and capital requirements that private insurers are. And they really don't want this job.
Yeah.
They've gotten it accidentally because we're not dealing squarely with the problems of climate change. And as you say, someone's going to have to pay the piper, and no one wants to think about it.
So what does that actually look like? If you play out this scenario, if we don't fix the situation, what's the financial crisis that's brewing?
Well, we're talking about maybe having to have a federal bailout or having insurance collapse in some of those states.
That's why I was asking about federal regulators, because I feel like when all else fails, it ends up going back to, the federal government.
Senator Whitehouse is certainly worried that that's a risk in Florida. That's what he's looking at.
California is one of the largest economies in the world. I mean, like you say in the piece, Silicon Valley, Hollywood. Is this an existential problem for the state?
People are very worried. I mean, the thing is, insurance is the kind of thing you don't think about until it's all, until you have the catastrophe. No one wants to talk about insurance.
Or once a year
when you have to pay for it. Yeah. And so, but it fundamentally underpins everything we do. And if the insurance market isn't working, we've got a problem that we've got to solve.
There's another quote, and it says, I think this was the Colorado Insurance Commissioner, one way or another, it may come back to taxpayers. If climate change is beginning to increase claims and payments, which ultimately it is, it's fundamentally the consumer and society in general that bears the brunt of that. I do wonder, how it circles back, especially when we think about costs, inflationary pressures. I just wonder, does it just come back to all
think
of us?
about FEMA and the federal flood insurance program. This is a great example. At some point, the federal government got responsible for insuring it does 95% of residential flood insurance. And there's a difference between affordability and accessibility. And the government has never charged people what they should charge people. And the result is that FEMA is forever indebted. Despite numerous billion-dollar bailouts, there's still $20 billion in the hole. And so the answer is we all end up paying for that. That is a taxpayer responsibility. So whether or not you live in a risky zone of Florida or California, you've got to start wondering whether down the road you are not going to be paying.
This has been a bummer of a day. Great story, but we're all stressed out by the news. Leslie Kaufman, correspondent for Bloomberg Green. It is our most read story in the Bloomberg. Do check it out on the Bloomberg or at Bloomberg.com. Leslie, thank you so much. So appreciate it.
It's 421 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ, a Fed Wednesday, and an up day for the U.S. market, with the S&P today higher by 26 points, up by about 0.5%. Dow Jones Industrial Average up 0.2%, higher today by 75 points. NASDAQ up 91. That was a gain of 0.6%. 10-year 4.10%. The 2-year 4.55%. Traders breathed a sigh of relief, with Jay Powell once again signaling that while a strong economy will keep officials on hold for now, he does expect the Fed to cut rates this year. Again, 10-year 4.10%. Spot gold up 0.8%, 21.45 the ounce. West Texas Intermediate crude up 1.2%, 79.12 a barrel. Bitcoin now up by 5.3% with a 66,000 handle, 66,712 right now on Bitcoin. The top business story today, NYCB. Shares did climb today. NYCB up by 7.5%. Certainly a volatile day for the commercial real estate lender. It did get an equity investment of more than $1 billion, gaining a vote of confidence in the struggling lender from investors that include former Treasury Secretary Steven Mnuchin. Again, NYCB shares today up by 7.5%. Recapping the Dow, the S&P, NASDAQ all advanced today. S&P up 26, a gain of 0.5%. I'm Charlie Pelleton. That is a Business Flash.
All right, Charlie, thank you so much. All right, everybody, here's how it's supposed to go. You work hard, you save, you pay your Social Security and your Medicare taxes, and yes, you retire. Hopefully enjoying some great time during those golden years, Tim.
Yeah, maybe you travel, spend time with family, relax, not worry about whether or not you're going to outlive your savings. But Carol, we know that's actually not the reality for many Americans. In fact, as you and I talked about back in January, younger generations are having a hard time even imagining retiring. A recent TIA Institute survey said that roughly 21% of Americans ages 22 to 34 said retirement is out of reach or not even part of their plan.
Which is pretty remarkable. Probably not all that surprising to our next guest, who writes that our society has largely given up on the idea that a dignified retirement should be the right of every worker in our affluent nation.
Teresa Ghilarducci is a professor of economics at the New School. She's also the author of the new book, Work, Retire, Repeat, The Uncertainty of Retirement in the New Economy. She joins us from New York. Professor, good to have you with us. Congratulations on the new book. Lay it out for us. In this day and age, just how bad is it out there for retirees and people who are working their way toward retirement?
Yeah, I'm glad to talk about it as a big societal problem, because I think right now almost everybody thinks it's bad for them, but doesn't realize how bad it is for their friends, because not being prepared for retirement is often the source of shame. And you don't wear it on your sleeve, you don't have your number on your chest. And so people are really swallowing their fear. And that's because most people should have, about $1 million in their retirement accounts when they're approaching retirement. And most people don't have anywhere near that. And if I give you averages, it won't even tell the picture, because Elon Musk is among our midst. And if, he walked into my house, it would be the richest person, ever on average. But the typical person really can be described by medians. And so people in the bottom half of the earnings distribution in households who are about ready to retire, this is like, from 54 to 64, the bottom half have nothing. The next 40%, our middle class, have about $200,000, and they should have over $1 million. And people even in the top 10%, they should have maybe $3-4 million to supplement Social Security and keep their lifestyle in retirement. I'm not going to cry out, alligator tears for them, but even they're worried. They have about $1 million. So like everybody across the board, doesn't have enough, but the bottom 90% are headed towards really retirement, just depending upon Social Security.
But here's the thing.
So that's bad.
This is something that everybody should care about. I think people would argue this is something that everybody should care about, because who pays for the folks who don't have enough to retire? What's the societal impact of something like that?
Federal government should care.
What's the stress on our system when that happens?
Yeah, so let me just talk to the adult children, who are listening. The adult children who are 40 and 50, my new research is showing that a third of those adult children are straining in some way to take care of their elders. Even if their elders, have a pension, there's no long-term care insurance. So what happened is that we're reproducing this retirement crisis. I mean, it is reproducing itself because those daughters and daughter-in-laws, sons and sons-in-laws are either reducing their work effort, reducing their savings, and we're seeing people actually take money out of their retirement to help their aging boomer parents.
Teresa, how did we get there? I'm thinking about, my dad who fought in World War II. There was VA benefits. There was a company that he worked for 50 years or close to it, that there was a pension. There were investments because of 401ks and so on and so forth, starting. There were Social Security benefits. Where did the system start to come undone in that we are kind of now talking about this problem, that this is where we are today?
Yeah, I mean, there was kind of a golden age of pensions for a group of society, men who kept their jobs for a while. That's for sure. They had defined benefit plans, and mainly their wages kept up with their productivity, with the rest of the economy. And then women who were working, starting around the 1940s, 50s, 60s, they earned wages that kept up with their productivity. They got more educated. Non-white workers really became enfranchised in the labor market. And even though not everybody was in a union, not even by any stretch of the imagination, the pensions that they negotiated were defined benefit pensions. I mean, you saw them in the private sector and the public sector, and even the companies that weren't unionized that kind of kept up with the leaders in their industries. So we had a layered system: Social Security, defined benefit plans, and wages, that kept savings up. It all fell apart around the 80s, when Ronald Reagan attacked the labor movement, by firing all the air traffic controllers. That had the structural problem of kind of slowing down wage growth, and wages really fell behind productivity, fell behind the growth of the economy. So that really hurt savings. We had a lot of debt creating institutions, kind of overwhelmed our wealth creating institutions, with very little down for our houses. And if we had any home equity, we would take home equity loans. But in the retirement space, we had the decline of these traditional pensions and a pretend replacement of those pensions with 401ks. And the reason why
it's
I
not even to even, is it?
Yeah, it's not even to even. And the 401k was supposed to be easy and really attractive to employers, and it was supposed to spread across the whole economy. But 50% of the population had a defined benefit plan. Those got replaced by the inferior 401k system, inferior in like 3 dimensions. And the people who had nothing still have nothing. And so we've had a 40-year experiment with these kind of do-it-yourself retirement plans. They're voluntary for the employer, voluntary for the worker. The worker has to take all the risk of choosing the right investments. And then when they retire, it's really up to the stock market. It depends whether or not they can make it last.
So we haven't even talked about much about Social Security. I don't necessarily want to get to that right now. We don't have time, Professor. But I want to know about the answer here. What's a solution to the problem that you outlined?
Well, the book spends a lot of time on the fake solution, which is to work longer. It's just obvious that most people don't have jobs where their employers want them to work longer, or they have jobs that will actually keep up their health, and their ability to do the work productively. And also, most people are pushed out of their jobs, either their health, or they're just pushed out, or they're laid off, before they want to retire. So working longer is a fake solution. The real solution is bold. It's a lot different than tweaking the tax breaks here and there and incenting small employers to have a pension, since they can't really afford much of anything. Especially if it's voluntary, they're not going to take on that liability. We really need to have a layer of retirement accounts on top of Social Security, and everybody who works, whether it's for Grubhub or Uber or Delta Airlines, just for 5 years, when they leave that good employer or they're working contingent and platform work, they should be saving alongside of their Social Security. So I advocate a universal pension system There's a bill in Congress called the Retirement Security Savings Act for All Americans. And the best thing about this is that it's bipartisan. A conservative Republican and a moderate liberal Democrat supported in the Senate, and the same thing in the House. And I think lawmakers are just hearing from their constituents everywhere they go about this palpable fear of what will happen to them or their parents, or their future selves, that this may be the year when nothing else passes, this kind of sensible universal pension system may pass.
Fingers crossed.
Big sigh.
We've kind of had a doomsday. Tim and I are going to change our names to gloom and doom because we've just kind of had a bunch of stories today that are along that front. But listen, really constructive conversation about what is going on and maybe our way forward to a better outcome. Teresa, thank you so much. Hopefully we can check back with you down the road. Teresa Gillarducci, she's professor of economics at the New School, author of a new book, Work, Retire, Repeat, The Uncertainty of Retirement in the New Economy, joining us here in New York. I think about this a lot, though, and I wonder, even if we got something passed, it's going to be a lost generation or a couple of generations until we can get a system maybe going.
Well, Bloomberg has done a lot of reporting about Gen X and caring for boomer parents, which I think is a big deal, and it's going to get even bigger soon.
Rightfully so. All right, folks, let's get a check on world and national news. Back to D.C. we go, and Amy Morris. Hi, Amy.
Hi, Carol. The House has passed a $460 billion package of spending bills to keep money flowing to key federal agencies through the remainder of this budget year. The Senate is expected to take this up before a midnight Friday shutdown deadline. We keep watching it for you. The Supreme Court has scheduled arguments for April 25th to review Donald Trump's claim that he's immune from criminal prosecution on charges of trying to overturn the results of the 2020 election. That case will determine whether and how quickly he faces trial in D.C. Republican presidential candidate Nikki Haley, meanwhile, ended her run for the White House. She did not endorse Trump. However, Senate Minority Leader Mitch McConnell did endorse the former president. Federal Reserve Chair Jay Powell reiterated to lawmakers the central bank is in no rush to cut interest rates until policymakers are convinced they have won the battle over inflation.
It will likely be appropriate to begin dialing back policy restraint at some point this year. But the economic outlook is uncertain, and ongoing progress toward our 2% objective for inflation is not assured.
The remarks echoed a consistent message from nearly every Fed official in recent weeks that the economy and labor market are strong, meaning policymakers have time to wait for more evidence that inflation is headed back to their goal before cutting those interest rates. Skincare companies' shares fell after a report detailing how acne products from several brands may contain elevated levels of benzene, a chemical linked to cancer. An independent testing laboratory asked the FDA to recall the affected treatments, all of which contain the active ingredient benzoyl peroxide. New York Governor Kathy Hochul is deploying 750 National Guard officers into New York City's subway system after a rash of violent incidents reignited fresh concerns about safety on the biggest U.S. transit network. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris. This is Bloomberg.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. Developing story headlines on the Bloomberg Professional Service. The NYSE is going to begin delisting proceedings against the retailer Express. Express stock will be suspended immediately, according to the NYSE, which says Express has fallen below its minimum listing standard. Bloomberg News has reported that Express is burning through a short supply of cash as it attempts to fix its troubled operations. An update on Wall Street today with the Dow, the S&P and NASDAQ all advancing. A Fed Wednesday, S&P up 26, a gain there of 0.5%. The Dow up 75, up 0.2%. NASDAQ up 91, a gain of 0.6%. Traders did breathe a sigh of relief with Jay Powell once again signaling that while a strong economy will keep officials on hold for now, he does expect the Fed to cut rates this year. 10-year 4.10%. The 2-year 4.55%. Spot gold up 0.9%. 21.47 the ounce, and West Texas Intermediate crude up 1.2%. 79.12 a barrel on WTI. Bottom line update on Wall Street and a Federal Reserve Wednesday. Joanne Bianco is investment partner and client portfolio manager at Bond Blocks, and she was a guest right here on Bloomberg Business Week.
It was, I think, positive for the market, positive for fixed income and equities that he was saying that we're at peak rates, because that obviously it would be, if we expected rates to have to be increased significantly from here, that would be something that would be probably more negative, certainly for the equity market, possibly could be harder on the economy as well.
And you can hear more of that conversation on the Bloomberg Business Week podcast. The commercial real estate lender NYCB did get an equity investment of more than $1 billion, gaining a vote of confidence in the struggling lender from investors, including former U.S. Treasury Secretary Steven Mnuchin. Today we saw NYCB shares advance by 7.5%. Recapping stocks higher today with the S&P up 26, up 0.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master along with Tim Stanovic. Well, I feel like we've had a lot of drama today, but we did not get to this particular form of drama.
This is the drama playing out in Silicon Valley right now. OpenAI firing back at a lawsuit filed against it by Elon Musk in a blog post late yesterday, using the billionaire's own emails to show that he backed the company's plans to become a for-profit business that he insisted it raised billions of dollars to be relevant compared with Google. Rachel Metz is Bloomberg News AI reporter. She and Shirin Ghaffari write all about the ongoing drama between Musk and the company that, yes, he founded, OpenAI. Rachel joins us from San Francisco. Rachel, okay, can you just take us back, not just to last week, but even earlier, and the origin of this drama here and this fight that's playing out between OpenAI and Elon Musk?
Oh my gosh. Okay.
Please help us.
I mean, we have to go back years, it sounds like. Okay, so a handful of people started OpenAI in, I believe it was sometime in 2015. And as we see in these emails, like it's pretty clear that they realized after not a super long period of time that in order to achieve what their initial goals were, initially it was a nonprofit, they were going to have to get a ton of money. It would take a ton of money to build and train the kind of AI that they wanted. And they didn't feel like they could do that as a nonprofit. And these emails seem to indicate that Musk understood that, which then it's like, well, what do? You got to make money. You got to be a company, or at least some sort of a for-profit company, entity, whatever, right? So it's just really interesting to see. I love seeing internal emails. Like, who doesn't? It's so juicy. So it was really interesting to see also, like, these were written at the time that the company was super, super young and was still a nonprofit for some of them. So, like, just getting a sense of how people were thinking about the company in the early days, to me, is fascinating.
Is this just rich dudes, like, fighting over, like, no, it's mine, no, it's mine, you said this? Like, what is it? Like, what's at core here? Because, Elon is alleging in a suit that he's, I guess, not comfortable with the close relationship that OpenAI has with Microsoft and how it's supposed to be open source and out there for everyone. What's really at the core of this?
Yeah, no, that is a good question. It feels the lawsuit that Elon Musk filed OpenAI has said it's sour grapes, essentially. And I think they're trying to sort of refute all the points that he made with these emails. And I think like the sort of general feeling is that they did a decent job doing that. This is not a legal filing, so a court might not care about any of this. But like in my mind, it's kind of like this blog post and these emails are like in a amuse-bouche, like this is what you get now. You might not like it very much, but this is sort of like a preview of what's to come in Discovery if you want to keep this thing going. That's kind of how I read it.
Hence the riveting emails, right?
Well, okay,
Yeah.
Rachel, I don't want to, get you in trouble. I don't want to get you in trouble here, but I'm going to ask you a question.
Don't then.
That seems very simple. It seems very simple, but I know it's not.
Oh no.
It's called OpenAI. What does the open refer to?
Sir, I have been thinking about this question a lot, and for a while, actually. It's a really, really good question. So what I did yesterday, just because I hadn't looked at it in a while, is I went back to like the founding sort of blog post, like when they said, "Hi, we're OpenAI, and and this is what we're here for." I will point out, there's no mention of open source in there. And in one of the emails yesterday that they pushed out, that was written by Ilya Sutskever, who was one of the founding members of the company, he gave a definition of what the open in OpenAI means that I had never heard before, and I just thought was so fascinating and so kind of weird. It's not what I think of as open. It was I'm trying to see if I can find it super quickly. In here, the open in. Yeah, oh, you got it.
No, is this as we get close? No, go. No, your story. Go.
oh, sure. No, he in the email it said as we get closer to building AI, it will make sense to start being less open. The open in OpenAI means that everyone should benefit from the fruits of AI after it's built, but it's totally okay to not share the science. And then he went on a little bit beyond that to say, but it makes sense. It may make sense to do it for a certain amount of time, and also or maybe he said that before.
Wait, and then Elon Musk responded, "Yep."
Yeah. No, that's my new response to everything over here. I just say yep.
It's an interesting way of looking at things. It's
open, but not that kind of open.
Yeah, open.
But what does that? What does that mean? I would never. I don't know. If I use that kind of definition of openness, in my family in some situation, they'd be like, "What are you talking about?"
Yeah, we need to get her to a hospital really quickly. So, again, is Musk just kind of ticked off that he's missing out on something?
And he's also got a competitor that he's trying to build too with XAI. Is this, just, Carol, you said sour grapes, but is it also hey, I got to kind of remove some competition here?
I mean, that is certainly, it's a possibility. I mean, I guess people would think of Musk as someone who, if he's unhappy with how something is going or dissatisfied with something, he's going to go out and make his own version of it, right? Build better technology. And that seems like a fair way to sort of fight back. But filing this lawsuit, I'm not really sure what's gonna come of it. I mean, I will say as a reporter, I would be very interested in the discovery phase, because that will bring out lots of interesting stuff. And there's probably a ton of not necessarily bad, but interesting historical stuff. Just reading these kinds of communications, I find fascinating, even if it's, nothing super revealing. It's just interesting to know what people were thinking at that point in time, because it's a really important part of technology history.
Yep. I'm going to love that too. I'm going to use that Elon response.
Yep.
Hey, it's better than
what?
The emoji that Twitter uses or X uses to answer questions from the press.
What is it? I forget.
It's a poop.
Oh, it's a poop.
Thank you. Rachel, thank you for saying that so I didn't have to say it.
Wait. Yup.
Yup.
This is the world we're living in, the second wealthiest person in the world.
Is it safe to say we're not done yet? We got 10 seconds, or because of the threat of those emails becoming revealed, or we're going to get more here? This lawsuit?
I don't think we're not done yet. I mean, we haven't heard OpenAI file anything back yet, and that should happen, I would expect. So stay tuned.
You know what? It's been a tough day, a rough day, a long day, but we got a yup and an emoji poop.
Rachel's the best.
She is the best. Rachel Metz is Bloomberg News AI reporter. Check her out online at Bloomberg.com. Thanks, Rachel.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. The big company story of the day. New York Community Bancorp shares did close higher, volatile session, but up today by 7.5%. The commercial real estate lender got an equity investment of more than $1 billion, gaining a vote of confidence in the struggling lender from investors that include former Treasury Secretary Steven Mnuchin. NYCB said the capital injection was led by Mnuchin's Liberty Strategic Capital, Hudson Bay Capital, and Reverence Capital Partners, confirming an earlier Bloomberg News report. Now, the shares did erase an earlier plunge after the announcement. Stock, though, finished higher today by 7.5%. Deutsche Bank has cut the bonus pool at its investment banking division by more than 10% after a slump in deals and a slowdown in trading last year. Deutsche Bank, the ADR is up today by 1%. Lots of retail earnings news today. Shares of Foot Locker plunged 29% after pushing back a plan to expand its sales to $9.5 billion by 2 years after a sluggish 2023. Nordstrom is forecasting muted revenue and comparable sales growth this year as sluggish demand at its high-end namesake stores offsets an improving outlook at its off-price rack stores. So, are there any bright spots? Dana Telsey of Telsey Advisory Group says the standout category is beauty.
In almost every single retailer, beauty is what's performing category-wise. But keep in mind the guidance at Nordstrom kind of bracketed consensus, and it's going to be a margin-pressured year in 2024.
And speaking of beauty, we'll hear from Ulta Beauty next week. And today, shares of Nordstrom did plunge by 16.1%. And those are our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody. Tim and I getting ready to wrap up. What was it? 4, 5, 6, 7 hours on
Who's
air
counting? Who's counting?
Oh,
You know, I'm paid by the hour. I don't know about you.
I was just going to say, my agent's calling. I want to be paid by the hour. Do not go anywhere. It's been a very, very busy day, but Doug Krisner in studio, getting ready to host the Bloomberg Daybreak Asia Hours because
Thursday for Asia.
Yeah. Is it?
Yeah, it is. Yeah.
Where you gonna I'm looking at the most read stories. You got Jay Powell in there. You got a new financial crisis brewing.
So there are two threads on the Powell story. Which do you believe is the more important one?
Probably the banking oversight.
I think you're right
Basel
about
III
that.
and all the regulations. It's funny, Mike McKee said, you know what, there wasn't a lot of questioning on the economy. We got pretty much what we got from the last Fed meeting from Jay Powell.
We're all looking at the same data, right? We know that
Yes.
the Fed is going to take its time before they begin to cut rates. The more important thing now is on the pushback to the Fed, the FDIC, the comptroller of the currency, those regulators wanting to add a requirement for big banks, the big eight, to boost their capital in the event that we get a downdraft in the financial system. And one of the things, Michael Barr, who is the vice chair of supervision, I think, was still saying this is an important thing. You know, and the other thread here, because you were talking about the NYCB story, let's not forget commercial real estate. And I don't want to make a mountain out of a molehill right now.
We want to be smart about it.
Just what is the risk? I don't know.
Right.
But I think that's the important conversation going forward. Is it manageable? Okay. Is it important for the Fed to begin to lower interest rates to take some of the stress out of that system? Probably, yes.
But you want to be careful if you're a regulator or the Fed, and because you don't want to, by moving too quickly or too aggressively to the downside, that all of a sudden everybody feels like, okay, wait, we can take a new risk.
Right. What is the problem?
Yeah.
Right.
Yeah.
Right.
And
I agree.
I always feel like in this kind of situation, I felt like it in the conversations we had on New York Community Bancorp, you know, when they talked about material weaknesses and not kind of the oversight, if you will, like that's what a bank needs to do. Do we yet have an understanding from commercial real estate what is still the potential risk and how much it changes in different rate environments?
Well, I think it's a unique story to New York Community Bank. You're talking about the bigger picture of commercial real estate?
I'm talking about the bigger picture.
So I think you bring up a really good point. And Carol, we always ask our guests who are talking about commercial real estate, like, hey, where are we in this cycle? Because have we, and you asked this question earlier this week, have we gotten to the point where, you know, we know what's going to happen with return to office? Like, are things going to actually get any better? What we hear over and over again is it depends on the type of office.
Because people keep saying, we still don't know how it's going to be. Like, I think we do
we
know.
do know how it's going. Yeah.
And I think the locale is also an important question to ask. You're talking about NYCB, obviously exposed to a lot of what's going on here in New York City.
Yeah,
Others
and rent
that's rent
stabilized.
stabilized.
Yeah,
right.
very
So that's
specific.
right.
And
Exactly.
a regulatory shift a few years ago that changed the way landlords can raise rents.
Right, right. So I think you have to take it market by market. But the other thing that it's the interdependence within the banking arena where you get, and this is what happened in March of last year, when you get a couple of bad apples that
Right.
kind of create stress. You don't know what the counterparty risk is. They're all the kind of the nuts and bolts, the plumbing within the banking system gets exposed in a way. There may be some stress there. You got to get smart people to talk about this. I'm not one of them. on
You're
this
smart.
subject.
That's why we have you on every
There
day.
are people that we have in this building that are super smart on this stuff.
The thing I would say is, and we spoke with Matthew Monks, who broke the story on New York Community Bank and raising the $1 billion, that he said these are smart investors. If they're maybe not household names to you, Stephen Mnuchin obviously well known, but if they're not, that, you know, is there some